Paytm shares have been locked at a 20% lower circuit for the second consecutive day today. Now, what's happening with Paytm? Let's discuss this today. So, the Reserve Bank of India took some significant action. On Wednesday, which is the 31st of Jan 2024, they barred Paytm Payments Bank from accepting customer deposits starting from 1st of March 2024. Now, why did they do this? Well, it turns out that after a recent audit, the RBI found some serious issues. They pointed out persistent non-compliances and continued material supervisory concerns. Now, what's important to note is that this is not the first time Paytm Payments Bank is facing regulatory troubles. About 2 years ago, they were already slapped with a restriction preventing them from onboarding any new customers. Now, before we get into the impact of it, let's understand who owns Paytm Payments Bank. Now, about 49% of Paytm Payments Bank is owned by the parent 197 Communications, which is essentially Paytm. Now, the remaining 51% is in the hands of Vijay Shekhar Sharma, who is the chief executive and founder of Paytm. Now, what's the connection between Paytm Payments Bank and Paytm collectively? Well, they are directly linked to one another. Paytm Payments Bank plays a crucial role as a banking partner for Paytm. Now, for example, when you deposit funds into Paytm's popular digital wallets, guess where they end up being stored? That's right, in Paytm Payments Bank. Now, in fact, Macquarie Capital stated that all of Paytm's 330 million wallet accounts were housed in the Paytm Payments Bank. So the money in those accounts is essentially deposited with Paytm Payments Bank. Now, how will the RBI action impact the Paytm app or the wallet of a customer? Well, until Feb 29th, customers using the app have the flexibility to either accept or receive funds. However, starting 1st March, customers will only be able to withdraw or transfer funds from their Paytm wallet or Paytm Payments Bank account. Now, this restriction applies until the available balance is completely exhausted. Importantly, after the deadline of Feb 29th, no new deposits or top-ups into the bank account or wallet, both of which are managed by the bank, will be permitted. Now, what happens to the UPI payments in that case? Now, if your UPI payments are linked to a Paytm Payment Bank account, these services will cease after 29th February. However, it's important to note that if your UPI address is linked to other bank accounts, like that of an SBI or an ICICI or an HDFC for that matter, you won't be directly impacted by the RBI's actions on Paytm Payments Banks. Now, what about FASTags? Let's talk about FASTag. After 29th February, credit transactions or top-ups won't be allowed in any customer accounts, prepaid instruments, FASTags, or other prepaid payment instruments. Now, this restriction extends to various financial tools including NCMC used in metros and wallets for food and fuel. The existing balance in these instruments, however, can be used until it's exhausted, but no fresh funds can be added after the end of February. So there's a clear cutoff for adding funds to these accounts or instruments. So what exactly will Paytm do? Well, Paytm has recently announced that it is going to make some changes in response to the directives from the Reserve Bank of India. They're gearing up to ensure compliance with the RBI's instructions. As part of this compliance, Paytm is going to cease its operations with Paytm Payments Bank and instead focus on collaborating exclusively with other banks. Now, in terms of the financial impact, Paytm anticipates that this move might result in a worst-case scenario affecting their annual earnings before interest, tax, depreciation and amortization, also known as the EBITDA. The estimated impact ranges from 300 crore rupees, which is approximately $36 million, to about 500 crore rupees. Now, to give context, Paytm narrowed its EBITDA level losses before accounting for employee stock ownership to 176 crores in FY23 from 1,518 crores in the year last year. In conclusion, the RBI's measures will significantly impact Paytm Payments Bank's business performance, eventually affecting their revenue streams. For the Reserve Bank of India, the hard action taken against Paytm Payment Bank signifies that it shows no mercy to non-compliance. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.